What does financial independence mean to you? It's a question that stirs up different images for different people. For some, it's a vision of a life free from the constraints of a 9-to-5 job. For others, it's the ability to afford the lifestyle they desire without relying on a paycheck. But regardless of the picture it paints, the path to financial independence often involves a common denominator: return on investment, or ROI. ROI is a financial metric that's universally used to measure the probability of gaining a return from an investment. It's the golden ratio that tells you if your investment is a profitable venture or a financial drain. In the pursuit of financial independence, it's not just about how much money you make, but also how much your money can make for you. And that's where ROI steps in, serving as a compass guiding you towards profitable investments. ROI plays a significant role in achieving this dream of financial independence. Scene script. ROI, or return on investment, can be a game changer in your journey towards financial independence. But what is ROI and why is it so crucial? Let's break it down. Imagine you're at a crossroads. One road leads to a town where you can buy a golden goose for $100. The other road leads to a town where you can sell the golden eggs for $50 each. How do you decide which road to take? This is where ROI comes into play. Return on investment is a measure that evaluates the efficiency or profitability of an investment. In essence, it's a way to compare the efficiency of different investments. The formula for calculating ROI is quite simple. You subtract the cost of the investment from the gain from the investment, and then divide the result by the cost of the investment. This numerical value helps you make informed decisions about where to put your money. It's like a compass guiding you on your journey to financial freedom. But remember, a high ROI doesn't necessarily mean an investment is good, nor does a low ROI mean an investment is bad. It's just one tool in your financial toolbox. But how does this play out in the real world? Well, consider the story of Warren Buffett, one of the world's most successful investors. He started investing as a teenager and consistently achieved high ROIs, which compounded over time and ultimately led to his immense wealth. Or take the example of Sarah Blakely, the founder of Spanx. She started her business with $5,000 and turned it into a billion-dollar empire. She achieved this by continually investing in areas that provided high returns on her investments. These are just a few examples of how understanding and leveraging ROI can significantly impact your financial independence. So let's dive into some real-life case studies to understand this better. Consider, for instance, John. He's an ordinary man with an extraordinary story. John was a middle-class worker, living paycheck to paycheck, always dreaming of financial independence. His journey began in the late 90s when he decided to dip his toes into the stock market, an intimidating venture for the uninitiated. But John was determined and ready to take calculated risks. He started small, investing in blue-chip companies, those well-established firms with a history of stable earnings. These were safe bets, but the return on investment, or ROI, was modest. John knew that to accelerate his path to financial freedom, he needed to be bold. So he started studying the market, learning about trends, and understanding how various factors influence stock prices. He spent countless hours poring over financial reports, charts, and market analyses, arming himself with as much knowledge as possible. In time, John became more comfortable with the market's ebbs and flows. He began investing in growth stocks, companies with the potential for substantial expansion and higher returns. Yes, these investments came with greater risks, but they also offered the prospect of higher ROI. John's strategy paid off. Over the years, he saw his investments grow exponentially. There were ups and downs, of course, as is the nature of the stock market. But by keeping a long-term perspective and not panicking during market downturns, John was able to ride out the volatility and see substantial returns on his investments. His ROI didn't just come in the form of financial gains, it also came in the form of knowledge, experience, and the confidence to make informed investment decisions. And most importantly, it brought him closer to his dream of financial independence. By leveraging ROI, John transformed his financial situation. He went from living paycheck to having a diversified investment portfolio that provides him with a steady income stream. His story is not just about financial success, but also about the power of ROI when used wisely and strategically. John's story shows us that understanding and leveraging ROI can lead to significant financial gains. Now, let's look at Sarah, a successful real estate investor. Sarah wasn't always the savvy real estate mogul we know today. She started as a novice, knowing little about property investment, but she had a clear goal: financial independence. Sarah understood that the traditional 9-to-5 job wouldn't get her there. She needed something that could yield more than just a paycheck at the end of the month. She needed an investment. Sarah began her journey by learning everything she could about real estate investment. She attended seminars, read books, and sought advice from seasoned investors. She knew that understanding the principle of return on investment would be the foundation of her success. So, what is return on investment, or ROI? Simply put, it's the percentage of invested money that's recouped after the deduction of associated costs. For Sarah, it was the key to unlocking her financial independence. Sarah made her first property investment in a small, rundown duplex. It wasn't much to look at, but she saw potential. She invested time and money into renovations, and through smart marketing, she was able to rent out both units at a profitable rate. The ROI? Well, within the first year, Sarah had not only recouped her initial investment, but also made a significant profit. This profit wasn't just money in the bank, it was a stepping stone towards her next investment. Sarah continued this pattern of buying, renovating, and renting properties, each time increasing her ROI. As her portfolio grew, so did her financial independence. Today, Sarah is not just a successful real estate investor, she's a real estate mogul. She no longer worries about living paycheck to paycheck. Instead, she enjoys the freedom that her investments have afforded her. Sarah's story is another testament to the power of ROI in achieving financial independence. It's not about the quick cash or the get-rich-quick schemes. It's about understanding the power of return on investment and using it as a tool to build wealth and financial independence. Sarah's journey is proof that with knowledge, determination, and the right investment, anyone can achieve financial freedom. So, how can you maximize your ROI and move towards financial independence? Well, there are a few strategies to keep in mind. Firstly, let's talk about the importance of research. In order to maximize your return on investment, you need to be well-informed. This includes understanding the market, the industry, and the specific investments you're considering. It's like going on a road trip. You wouldn't just hop in the car and drive off without a map or GPS, would you? Similarly, you shouldn't dive into an investment without doing your homework first. Next, let's discuss diversification. This is a strategy that involves spreading your investments across various assets to reduce risk. Think of it like not putting all your eggs in one basket. It's a way to protect yourself from the volatility of the market. Diversification doesn't guarantee profits or protect against loss, but it can help create a balance between risk and return. Patience, my friends, is another critical factor. Investing isn't about making a quick buck, it's about building wealth over time. The most successful investors are those who stick to their strategy, even when the market is testing their patience. Remember, Rome wasn't built in a day, and neither is financial independence. The last point to consider is that maximizing your ROI often involves taking calculated risks. This doesn't mean throwing caution to the wind, but rather making informed decisions that may involve a certain level of risk. As the old saying goes, no risk, no reward. However, it's crucial to ensure that these risks are calculated and not reckless. To sum it up, if you want to maximize your return on investment, arm yourself with knowledge, diversify your portfolio, exercise patience, and don't shy away from calculated risks. Each of these elements plays a significant role in your journey towards financial independence. Maximizing your ROI requires strategy, patience, and a willingness to take calculated risks. So, what have we learned about ROI and financial independence? We've journeyed through the stories of individuals who've harnessed the power of return on investment. They've shown us that ROI is more than just a financial term. It's a key that unlocks the door to financial freedom. From the stock market investor who multiplied his wealth to the real estate mogul who built an empire, each case study has illustrated how ROI can transform an ordinary income into an extraordinary one. We've also highlighted the importance of maximizing ROI, of seeking out the best opportunities and making smart, informed decisions. Because at the end of the day, financial independence isn't just about making money, it's about making your money work for you. And that's where ROI comes in. It's a measure of your money's performance, a gauge of its effectiveness. Remember, ROI can be a powerful tool in your journey towards financial independence. Use it wisely.